Hey everyone, and welcome back to the Tesla Stock Podcast. What does it look like when the richest person in the world puts his money where his mouth is? It looks like a $1 billion stock purchase. Elon Musk has just made a massive personal bet on Tesla, sending the stock soaring and completing a stunning comeback for the year. A comeback that is now being supported by some surprisingly strong operational news. With the stock now trading around the $415 mark, we need to break down this massive vote of confidence. Our top story is the one that has the entire market talking. In a filing disclosed this week, Elon Musk revealed that he spent $1 billion of his own money to buy additional Tesla shares on the open market. This is an incredibly rare move for any CEO. Most executive stock purchases come from exercising options at a tiny fraction of the market price. An open market buy of this magnitude is the ultimate signal of a leader's belief in their own company. The market reacted immediately, with the stock jumping 7%. At the open on Monday and finishing the day up nearly 4%, that was enough to wipe out all of the remaining losses for the year, completing a wild round trip for a stock that was down as much as 42% at its lows. As Wedbush analyst Dan Ives put it, it's a huge vote of confidence from Musk, and the bulls love seeing this. It sends a positive signal after a very tumultuous year. This comes just after the board proposed a new long-term pay package that could be worth up to $1 trillion, signaling that both the CEO and the board are all in on the company's future in AI and robotics. But this level of wealth and power doesn't come without scrutiny, and it's coming from some of the highest places on Earth. In a recent interview, Pope Leo XIV specifically cited massive CEO pay and Musk's proposed package as a troubling sign of the income inequality that is polarizing society. But while Elon Musk's stock purchase is a massive bet on the future of Tesla, the company has also been quietly cleaning up some legal troubles from its past. This week, it was reported that Tesla has reached confidential settlements in 2 separate court cases in California around deadly crashes involving its Autopilot technology. One case involved a 2019 crash where a teenager was killed, and another involved 2 people who died after their vehicle was struck by a Tesla that was reportedly on autopilot. The size of these settlements is unknown, but they come on the heels of the massive $243 million verdict against Tesla in the Florida Autopilot case back in August. It seems that after losing that jury trial in a very public and damaging way, the company may be shifting its legal strategy. While Musk has famously said he will never settle an unjust case, the financial and reputational risk of repeatedly going to trial over Autopilot seems to have prompted a more pragmatic approach. It appears the company is now trying to quietly resolve these legacy cases to avoid more damaging headlines and courtroom revelations, especially as it pushes its fully autonomous narrative harder than ever. And just as Musk shows confidence with his wallet, and the lawyers clean up the docket, we're getting signs of a surprising and powerful operational turnaround from a market that many had written off. Over the weekend, the head of Tesla's Grünheide factory in Germany, André Thierig, announced that the company plans to raise production for the rest of the year due to what he called very good sales figures. He stated that they have revised their production plans for the 3rd and 4th quarters upwards, and are seeing a positive trend across the more than 30 markets that the German factory supplies. This is a critically important data point. As we've covered on this channel, the sales data out of Germany and much of Europe has been dismal for most of this year. In July, sales in Germany were down by more than half. To now hear a direct statement from the plant manager about a production ramp-up because of strong demand is a dramatic and unexpected reversal. It suggests that either the newly refreshed Model Y is a massive hit with customers, that demand is far more resilient than the earlier data suggested, or both. For the bulls, This is a powerful counter-argument to the narrative of a European sales collapse and provides a solid operational foundation for the stock's recent rally. So, to sum it all up, Elon Musk has made a massive $1 billion personal vote of confidence in his own company, helping to cap an incredible stock rally that has brought it back into positive territory for the year. At the same time, the company is quietly settling more of its legacy Autopilot lawsuits, likely to manage its legal risk and clear the decks for its future autonomy push. And to top it all off, we're getting surprising and very positive operational news about a production ramp-up in Germany, suggesting a potential turnaround in European demand. This brings me to my question for you. What do you make of Elon Musk's billion-dollar purchase? Was it a genuine signal of deep, undervalued fundamentals that only he can see? Or was it a brilliantly timed, symbolic gesture to boost the stock price and reinforce the bull narrative after the big pay package proposal and a tough year for shareholders? Let me know what you think his true motivation was in the comments below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and we'll see you next time.